Hello everybody, welcome to your TraderMerlin show for Friday. It is the weekend edition, which can mean, well, it means a couple things. But the first one is nice frosty glass of Bib & Tucker whiskey, 6-year-old bourbon today. It was a great trading week for me. I hope you had a great trading week as well. So cheers everybody, happy Friday. Now, obviously we had a ton of stuff going on, from central bank announcements, major economic data, etc. And I could do my normal routine, which is just sit here on a Friday and talk about it all, plus field all of your questions. But I thought, you know what? It's always better when you have somebody to bounce some ideas off and talk to. So today, got one of my friends on from Kansas City, which I'm sure we'll go back and forth regarding some football along the way. But we've got Don Fron joining us today. Don, how you doing, my friend?
I'm good, man. How you doing?
Good.
There's really nothing to go back and forth about on Kansas City. You saw it took us 13 seconds to win a game. There's a lot of those in the game, so that's really it.
I have to say that was probably one of the best games I've ever seen, and I'm not even either a Bills or a Chiefs fan, but what a great game that was, man. I hope this weekend's just as good.
Yeah.
How were your ulcers doing? Because that had to be gut wrenching, man.
Actually, so I was in the middle of one of my streams, and I caught the last quarter, and so I came up with like, man, I'm already hearing what a game this thing is. They're keeping me updated in the chat, and then I finally get up to it and watch that last quarter, and I thought this is where we lose. Like, we came in, I was like, they're gonna score one more time, and
yep.
we're gonna lose the last little bit, and then they did. I was like, game over, and then I was like, well, we could still kick it and tie it up.
Yeah, that was.
And then yeah, sure enough, that was the craziest game.
That was pretty good. Phenomenal stuff. Well, I'm looking forward to this weekend. I'm looking forward to a Super Bowl rematch between the Chiefs and the Niners. We won't give up the game the next time, that's for sure. All right, hey, it's been, I don't know how long it's been. It's been like 8-9 months since I've had you on the program. What's been new with you? What are you up to?
Nothing. Same thing. same old. Which we could always chat about that one day, just how boring trading is. Once you get past that learning curve.
It's got to be. There's got to be some new stuff. So you were, I think last time we talked, it was Tesla. You were a big, all over Tesla. You loved the longs on Tesla. The last couple weeks, or especially the last few days, been some brutal downside moves in Tesla. Are you still active with Tesla?
I just bought Tesla today.
Just bought it today?
So it's hard for me to talk about on YouTube, because we have, like, there's the investment side and then there's the trading side.
Right.
And investment side, I'm not going to sell Tesla. I think I'll sell Tesla when the growth stops.
Mm-hmm.
We're still opening up factories, ramping up factories. Like, even though I'm actually more bullish the energy side, right now that's just not the focus. And maybe when that becomes the focus, I'll worry about it then. Right now we got to finish up the car side, the full self-driving, the robot, all of that. So I'm kind of just letting down. On the trading side, that's up and down and all over. I love options contracts on Tesla.
I bet. I mean, it's funny, watching how much it fell yesterday. Today you have a little bit of stabilization graphic-wise for the viewers. I've got a 200-period moving average on here just because, you tiptoed down to it today and bounced off. But the volatility on that thing is extremely high. So are you more a buyer or a seller of options on this one? Because I would assume that the options for selling, or the premium for selling, is pretty damn high.
It is, but I'm still a buyer.
Yeah?
Yeah, when volatility gets that crazy, I'd rather buy the premium. You got to pay to play, so it's hard to just tell everyone to do that, because if I make the mistake, Tesla can move $100 in one day, and if you're on the wrong side of that, well, that premium's gone.
Yeah,
you just transferred that money to someone else's account on that one.
Absolutely. So you're obviously bullish on Tesla in the very long term, and also in the short term because its most recent sell-off. What were you looking for with these options? I mean, are you kind of going off of some technical levels that you see up ahead? It's your target for it, or just your thought is it can't go any lower from here?
Oh, if it's not at zero, it can go lower.
I like that.
Be careful with that mindset.
That's a great attitude to have. You know what? I mean, and you probably learned that one the hard way. It can always go lower. Just look at crude oil last year.
Yeah.
Or 2 years ago.
I bag held something when I was brand new into trading, and my account was small back then. And ever since then, like now, I wouldn't even no alert would even go off at the amount I lost back then, but it annoyed me so much that I'll never hold something like that again. Like it has my levels, supply and demand. It hits my zone, so I'm buying. Now when it comes down, it takes like my type 2 entry. I'm usually just trying to buy like a naked contract, go long, and then I always have like a realistic take profit. Like it could go here, up here is probably a little bit too much, too high, But at that point, I still trail things. So I've been surprised too many times to just go ahead and close the things out. So my main focus is always my entry. And if I'm wrong, I'm wrong. But if I'm right, I like to trail. So hopefully I can get, my profit target or more. But that's that has nothing to do with investing when it comes down to that on Tesla. So I'm in calls or puts, green candles or red candles. What's the current direction? They're just so liquid, and $100 moves a contract big. So it just makes for great trading.
Right.
But it's usually, lately it's been day trading in and out same day. But, back when it was kind of on that little grind up or, hopefully, when it gets exciting, then I swing those long. But a lot of times I trail it. I hope it goes to the moon. But, in that spread and just volatility in general, it tags out for the day.
Yeah. I mean, your odds of staying in something like that's that volatile for a long period of time is difficult because of the swings that happen on it. As someone who is, you are definitely publicly bullish on these overall markets, or you have been publicly bullish on the overall markets. Let me rephrase that. Given what's happened over the past month or so in the equity markets, has your perspective of where things may be headed changed? Are you still thinking maybe we get to more all-time highs, or is the high in for the year?
Man, I told everybody this is what we were going to talk about on this stream. I don't think the high is in for the year, but between now and June, I'm kind of on board that. I think the last half of the year we're fine. I think we sell some things off though. While everyone is, and I wanted to throw out so many disclaimers on this because everyone is quick to forget the last 3 weeks of red when one green day pops up.
Right.
I think we are green next week. I think we kind of keep this attitude that we've had where it's one green week and then 2 red weeks. And I think we keep that kind of grind down. I don't see so in terms of crash, as in over 21%, I do see that. But when you say crash on YouTube, everybody's picturing 2020 full cash grab, just melting straight off a cliff. I don't think we actually see that. I think we see more of a bear market. Are you on TradingView?
Am I on TradingView? Yeah.
Yeah. Hit Alt-I. Like that. We invert the chart like that same bull.
I'm not logged in.
Oh.
I don't.
Okay, I'd say it just inverts the charts, and I was just gonna say I think we see that attitude just to the downside.
Yeah,
unless there's a full blown. We go. That's all aside from we go into an actual war with Russia or anyone else. Then any put will be fine.
Yeah, and, when you look at a market situation like we have right now, I think this has been a tough one for me because I've been trading for so long. I've seen some significant bear markets. I've gone through the dot-com crash and the finance bubble, but a lot of people who have started in the last couple of years, hell, if you started after 2009, you haven't seen a technical bear market. You saw that one drop down in February of 2020, but other than that, there's a reset of your perspectives that has to change. If we start going in a bear market, instead of buying the pullbacks into demand, you're looking at selling the rallies into supply. And I think I agree with you. We don't always have to agree. That's fine. It's just the way trading works. But I do agree with you that we'll probably see an up week. I think you're going to come right up into some supply levels, and then when we hit those, we'll make some new lows from there. So my attitude has changed until the market proves me wrong. But I'm definitely looking more towards the short side at this moment.
Yeah, so so an important thing to talk about, or at least I want to do on YouTube, is talk about overall positions. We know stocks are hard deltas and options are soft deltas, and it gets really hard because when it's shaky like this, I'm in SQQQ and TQQQ, so it gets complicated because I see. A bear market doesn't mean grab puts, all puts, short everything to the dirt, because there's still the ebb and flow, still the shorts covering or the dip crowd trying to take advantage of both. And I think this will benefit a lot of people if they just talk about their overall. Right now, overall, I am delta bullish. I have bullish positions. I'm in SQQQ as well, kind of hoping that that might be if we're wrong, right? This week we've established a range. It's going to break up or down.
Right.
Come next week, if you're long or short, there's going to be someone was right, someone was wrong. I'm kind of hoping overall it goes up. SQQ's red. I can grab that dip, ride that back down. But just getting everyone's perspective, right? And when it gets choppy, everyone is just, they get too narrow focused. And the bigger picture right now, I think we are kind of up there. Not that valuations ever really mean much to me as a trader, but they've gone high. Even investors are saying like that's way too much. A lot of companies saw a lot of growth that they just can't hang with. Like
Sure.
At that point, it did leave reality.
So let me comment on this. There's two they're going through in chat here. What matters most, Truth and Pepe are saying, you know, fast drop equals fast rally. To a point, I think you have to wait and see what that picture shows you. Because in my opinion, a fast drop doesn't necessarily mean a fast rally. Remember yesterday we talked about impulse versus corrective phases in the market. If that impulse, let's call it a fast drop, right? That's your impulse. If that rally back up is kind of slow and taking a little bit of time and not really aggressive, then that's cluing you into another leg down, and you may not get that fast rally. What we saw in 2020 was a huge fast rally down, an incredibly fast rally up, therefore continue on with the major trend. So it doesn't always have to mean, you know, fast sell-off, fast rally, or fast rally, fast sell-off. It's the characteristics of what price action tells you on that chart that can give you a better understanding of where we're headed. And it'd be very interesting to see how we bounce from these levels. You know, we talked about this. Don thinks it's going to rally next week. I do as well. But we had a really aggressive sell-off. You know, if you're thinking fast rally, does that mean NASDAQ back at 16.6? No. I think you're going to 15,000 maybe, and then we'll see that sell-off again, and that would be an indication that we are, in fact, in a negative bearish type of environment. So go with whatever that market gives you. So I just wanted to add my 2 cents on that because, you know, markets do whatever they need to do. It's just our job to ride their coattails.
Well, I love that word too, because characteristics is something I say. Like when you trade just a few tickers, you understand that its characteristics, how it actually moves. And when we saw that fast drop and that fast rally, everything characteristically stayed the same. It stayed very high emotionally. Like that fast move, that fast down and up is everybody's just knee-jerk reaction. Everybody's panicking. Sell, 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 buy, buy, buy. Like it is just Kramer audio all day, every day. But when you see the fast rallies down, and then it kind of just the shorts don't really cover. There's a green can. Like you're building a bear flag at that point. Like either the bears are catching their breath for the next leg down. You know, they're definitely playing that game of tug of war. That's where the stage is set. Almost like exactly what we did this week. Like we just played that game. And then, you know, next week, I think someone just gets pulled through the mud. But then that leads us back to the who's setting what trap, because that rally into the close today kind of looks like, well, one of two things. Either shorts did cover as a traditional take profit Friday, and then they bought back their positions, got the rally into the close, or get everybody excited. And the real dip buy was Friday at close. And then, you know, next week, it was the bear flag playing out.
Yeah, I'm actually bringing that one up here for us. Let's go to that bear flag. I mean, again, we'll have to wait and see. And pardon my drawing. I know I got a bunch of Don's crew in here today. I draw very differently than Don. And I'm actually mapping out on the S&P a head and shoulders pattern. So I'm kind of expecting this rally back on the S&P up to, let's say, 4,500. And yes, I know some of you are going to be like, oh, patterns don't matter. You know what? It's okay. Believe what you want. I'm a believer in patterns. Just like I think people have patterns, I think price has patterns, and so do the traders behind the securities. So that's the formation I'm looking at. I think S&P next week or next 2 weeks rallies up to 4,500. If it does happen, I'll be buying some puts because the premium should be getting cheaper as we rally. And if I'm wrong, you know, I'll have a stop loss up above 4,500 so I don't lose a lot on it. But I'm definitely a fan of the patterns. If we do get that rally up to 4,500, you know, questionable whether that would still be a bear flag pattern. But either way, it's showing negative sentiment.
Yeah. Right now, I think we're seeing bear flag or reverse.
Yeah.
You know,
right.
Something I say all the time, bear flag or reversal. Gets up to that, you know, 4,500 mark you have charted out there. I'm just going to call that a lower high. Like the bear flag reversal, that was this week. So next week we'll have the trend up. And I think that's where we start to see everyone talk about all-time highs again, get everybody excited. The puts become cheap, and the rug gets pulled. And you know, I'm kind of watching that market sentiment at all.
Yeah, absolutely.
Not trusting it, but letting it go. Trade the charts you have, not the ones you want. Ultimately, keeping an eye out for what's the next move.
Sure. You know, look. Let me ask you this: how do How do fundamentals play into things for you? You know, obviously, if we're looking at the big picture, you know, fundamentals are probably fairly important. But it sounds like you kind of straddle that fence of doing some pretty active trading as well as some long-term investing. So are fundamentals factoring into both sides of the equation for you?
Fundamentals factor into investing. If I'm picking something to invest in, I'm gonna buy it now and I'll check it in 5 years. Like Uber's one I'll never invest in because fundamentally I think we got Tesla coming out with taxis. Like what's Uber? Like Tesla would have to buy Uber.
Yeah.
You know, so there's things like that on that side. Fundamentally speaking, that's important. As far as I think it's nonsense when people talk about fundamentals on trading. Nothing fundamentally changed today with Tesla, like and it sold off. And if next week we rally, nothing fundamentally changed. So if something changed fundamentally, hey, the company is making this move, then it matters. Day to day, it doesn't. So I like to know what I'm in, kind of keep my ear to the ground, but it doesn't affect my trading. The charts tell you where everybody's buying and selling. So on the trading aspect, I wear that hat. Where the buyers, where the sellers. Sure. You know, because I'm just trying to float off the radar and just go with the crowd.
Sure. Well, I do a little bit different. I lump fundamentals in with economic data. So really, again, I guess I was wrong there. I don't look at fundamentals. Like I don't care what the balance sheets are, income streams, flows. That really doesn't impact me at all. When I'm thinking fundamentals, I'm thinking kind of the macroeconomics. Like today, we had the core PCE price index, you know, which showed an inflation rate that goes back to we haven't seen this level since 1982. That's 40 years we haven't seen this level, you know. And do you remember, Don? I don't know, you're probably a little younger, but do you remember what the Fed funds rate was when we had in 1982?
Yeah, I wasn't born yet, but I was still psychic at the time. So. No, I don't, but I do. Just my piece on. I'll hear you have to say, but just my piece on that. All of that new, the way there's the news and the way the government kind of gives it us into little spoonfuls. I think that's where the manipulation lies. I don't think they give us the whole story. So I'd still rather listen to it, take it with a grain of salt. Ultimately, where that money is being put tells me the real positions behind the scenes.
Sure. Well, I'm a huge fan of, you know, history is a great teacher. So I've, you know, obviously something happened in the Great Depression might be slightly different times, but going back into the 80s, you know, that's still relatively recent history. Alan, you're right. It was 13%. It was anywhere between 12 and 16% during the 80s. And, you know, you look at the Fed funds rate, let's say at 13% to control the inflation. Well, if we're at the exact same level of inflation that we were back in 1982 and the Fed funds rate was 13, we have a Fed funds rate of 25 basis points, which means we have 12.75% potentially to go up to equal those highs. Now, clearly, different time, but you know, it's one of those pieces where, you know, the way I'm looking at it, Don, is they're probably going to have to ramp up that Fed funds rate pretty quick. Like maybe it's not 25 basis points at a clip. Maybe we jump in 50, and of course that will have a long-term impact on the equity markets. And that's how I view fundamentals.
Okay. Yeah. Well, so they've laid out the map for everybody.
Yeah.
So we know that right now we're thinking 0.25. So as long as we stay that course, I think the market still goes up and down. It's when I watch out for any deviations from that, because at that point, yeah, when he comes out and says we're going to go, you know, 50 instead of 0.25, that'll, like, who's going to be long in that market right now? Like that will be a bearish reaction.
Right. Well, and I think the challenge is right now, you know, you don't know. You do know that they're going to be raising rates, especially with the news that came out today. I mean, March is pretty much a foregone conclusion at this point. But you remember, if you go back into September of last year, the Fed was saying, you know, potentially 2 raises. And then it was 3. And then it was 4. Now people are pricing in 5 rate increases. Like, oh, man, you know, I always talk about how 1 rate increase isn't going to stop the market. It's just slightly tapping on the brakes, right? Just putting some pressure on it. But you do 5 times in a year, and you're putting some pressure on that market to slow it down, which is, you know, kind of why I was asking, you know, about the long term and how it ties in. There's a certain point where if the path that they're laying says, you know, 4 or 5 rate increases, then I'm no longer even considering long positions, right? I'm now just going, I need to be able to short stuff coming into supply, period. But that's how my mind works, and I know you operate in a slightly different manner, so I was curious to get your take on that.
Yeah, as far as the investment side, it's I don't know, it's kind of like a dollar cost averaging, but I only buy at the lows. Like I don't like to just buy on its way down. Like if I can get it cheaper and get more for the same amount of money, I'll just wait. So I'll let the selling stop. So I don't, if I start looking at my investment account, it'll become my trading account. Like you can ask anyone in my chat, I'm the worst. I did it one time in my investment account. I was like, you know what, guys, Tesla's up there. I'm gonna sell it. Right. I think I sold it at 662, and I got back in at 661. I was like, no, I just can't do it. I'm gonna get back in. You know, so I'm technically $1 ahead of the investors.
Woohoo!
Yeah.
Make it rain, baby.
Yeah, when it starts to sell off, like when it's bullish and we're headed up, you know, I add to the investment account on those dips. But when we're selling off, I let the sellers just do what they want, and I don't exit positions and get into cash. What I do is take the cash from my trading and I put that on the side so that when we get the dip, I can buy the actual dip, not the downtrend. And it just brings, you know, because in the end, let's say we have a bad year, in the grand scheme of things, 1 year, you know, isn't I'd rather just be active in there and have something. Because the one thing is, when let's say we turn on a dime, and no one's going to see that coming. It'll be the first move. You know, that initial move is always where the easy money is made. I'd rather just be in that and then, you know, I guess add on later than try to get in after that.
Right. All right. Let's shift a little bit and talk about indicators. So, you know, for those that watch my show, you know, I'm not really a big fan of indicators and how all these technical indicators work. I think that we need to look at what price is doing. That's most important. But you and I had a conversation about moving averages. And, you know, we're at a point right now where it seems like a lot of people are asking me about using these moving averages, whether it's the 50, the 20, the 200, you know. Give me your take on the utilization of these trend following tools and kind of how it may play into your trading or investing.
Well, I don't watch any of them.
There you go. Love it. That was an easy one.
Well, but here's the thing. Here's the one thing I wanted to ask you about, because you have the what's the noodle you have up? You have the 200.
Yep.
Right.
I can put up whatever you like, but.
So what helps make me a better teacher to convey it, because I know people don't only watch me. I do watch the other YouTubers. I never listen to the actual radio. All I do, even in my car, is just stock stuff, and then YouTube will just autoplay the next one, so I kind of get everyone's feel. And wow, they are largely just wrong. Like there's just so much stuff out there in the YouTube world that people just have. I don't know if it's the blind leading the blind or just a flat out scam. But I have noticed a trend. A lot of these have been following these EMAs, moving averages, simple or exponential. You see how you have it up, and the NASDAQ gets broken. Yep. Well, once it breaks, you know, at first we're headed to it. This is going to be the dip. This is where it's at. And then I've noticed a trend between YouTubers ditching those now. And now it's support and resistance.
Oh, there you go.
And so I don't know. I actually was going to get your opinion on, because there's a fine line between the market's changing, you need to adapt, and indicators. There's just this world of, it's so easy to make the ones you have look good at that time. So is that happening where their strategy sucks? Right. So now they got to find a different one. Are they adapting, or are they just still trying to look good and say, now it's this indicator? I've noticed this trend overall. I don't let any of them influence my trades. Every time I do, I get suckered into it. Like the RSI was right one time, so I look at it on the next trade. It always suckers me into losing a trade. It just messes with my head. So just to keep that out of it, I just don't look at them anymore. But I know a lot. Like everybody uses them. Yeah.
You know, there's an old phrase we used to love when I was teaching physical classes at Online Trading Academy. There were some people that were someone who you know, and actually you called out on social media, who I won't mention, but there was a phrase we like to use that says, if you can't baffle them with if you can't dazzle them with brilliance, you baffle them with bullshit. And it's so easy to pull up a chart of anything. You know, I'll bring up, here's one just for example, and say, oh, okay, well, I'm using these moving averages. And there's another phrase I like which says, if you torture a chart long enough, it'll tell you whatever you want to hear. And, you know, like in this example, I could modify this moving average here. Let's just change the setting and get it to a point where it's going to tell me, oh, it's a buy. So, oh, there we go. Today, chain link crossed above its 4-period moving average. Like, well, first off, you're an idiot for using a 4-period moving average. But you're right. I think a lot of these people on social media don't have a clue. I was joking with my group. You know, I've got a small group. I do a show every day, which I've done live every day for 12 years now. And I've got 4,000 something followers. There's a girl on Instagram who's got a double D and wears skimpy little lingerie talking about Forex, and she's got like 6 million followers, and she has no idea what she's talking about. You know, it's like, wait a minute, I know people like Don trade. I trade, you know, and there's so many people out there that I don't know how they get these followers. I really wish it should shift away from, it's kind of like society, right? You have people who are hurting society. Well, just threw Kim Kardashian in the mix, right? Here is somebody who honestly is worthless. Kim Kardashian, leave, just go away, and you're destroying young girls' impressions of themselves and ruining that. But if you actually gave attention to somebody who was really helping people develop and get better, we'd be a way better off planet. And I think it's the same thing for trading and investing. There's some people out there that don't know shit, and yet they've got 1 million followers on the market. It blows me away. Absolutely blows me away.
Well, have you ever tried showing your legs on Twitter?
I have not.
I'm just curious.
Not today. Not today. No, that's a totally different channel. You can go to my OnlyFans page, everybody, and that's $3.99 a month.
Yeah. Oh man! So even just on that, there's a ticker my buddy's in, and I got in just to show off the fact that you can sell contracts. At least if you're going to hold something, sell contracts against it, and I'll physically do it just to show you. And so I'm on Twitter. I'm brand new to Twitter, so I'm searching this ticker BBIG. And
what was it? VDIG?
BBIG.
All right, I'll bring it up just for fun. There you go.
They got some crypto spinoff coming, and that's the next catalyst. It's going to be huge, and maybe pump and dump is all it really is, I think. But man, this girl on Twitter, it ended up going viral. I try to get confrontational anymore, but I almost replied to her because she's got 20,000 following, and she's telling people what to do. You know, she's giving the Twitter advice.
Yep.
And she buys some $7 call options on this. Now everyone's saying if you want to influence a gamma squeeze, you got to exercise your contracts. Everyone on Twitter is saying this, and so she exercises her $7 contracts and is pissed because her average price is $7 and she has no idea. She goes, "What's going on? Why did my broker tell me this? Why is my average this high?"
Love it.
Like, hold on a second. We are talking about the absolute basics.
Yeah.
And you're out here giving advice? Like, people are listening to you?
Yeah.
Like, oh, man. Like, I don't have anything bad to, like, do your thing if you want to try to teach people, but maybe you get some experience first.
Well, you know, and I think that's, honestly, I hate to say it, but that's on the end user. You know, caveat emptor. You should be able to know if your influencer that you're following or whoever you're following, you know, actually trades and, you know, is worth their salt. You know, it's hard to figure out sometimes, but, you know, some of them are easy as pie to figure out. I mean, I could run through right now and spend an hour going through social media sites and be like, this guy doesn't have a clue what he's talking about. He doesn't use indicators the right way. You know, he doesn't understand price. Just go away, people.
Yeah. New people, though, just don't get that. They think, okay, this is how it is.
Yep.
And then I think that's the trap I do feel bad for. It's because, like, there are new people that, I don't want to call them stupid. You just don't know what you don't know. And then when you YouTube it, you think, okay, this guy's got some flashy neon lights. He's wearing a suit. Look at his background. He's got a studio. He's got to be right. And then you follow him just right off the edge.
You know, it's funny because we say that about YouTubers, but let's be honest. You could look at, you know, one of the biggest influencers in the financial markets. You could talk about Jim Cramer, or I talk about him all the time. You know, he's essentially got the same thing, except he has a tremendous amount of experience in the financial markets. He actually knows that he's giving bad information and manipulating people, whereas other people, they don't have a clue what they're doing.
You think Kramer's out here? Do you think he's purposely doing it?
Look, man, did you see his tweet on January 3rd? I made fun of this the other day, so I'll bring up a chart for the viewers at home. We've looked at this one. NFLX. Basically, his tweet on, and there's the marker. I got a vertical blue line here of when his tweet said simply, Netflix, exclamation point, buy, in capital letters, exclamation point. Now, why would you want to be buying Netflix as it was in a downtrend coming off these highs? It's making lower highs, it's making lower lows. You know, at this point, you're thinking shorting the rallies. Plus, COVID's, you know, kind of, let's just be optimistic and say COVID's kind of at an end. So, you know, Netflix got its big boost because we're all stuck in our houses going crazy thinking, I need to watch something on TV, right? Now it's like, hey, I don't even need my Peloton anymore. By the way, we looked at that one, made some fun at PTON. I mean, wah, wah, talk about a sinking ship on that bad boy. But Jim Cramer, I texted him because I have his number on speed dial. I tweeted out, I was like, Cramer, you should be ashamed of yourself, At least say, hey, sorry about that one. I didn't see that coming. But he tweeted to buy this thing at $600. It is now at $384. And I tweeted like, hey, who's paying you to say this stuff? Did somebody tell you to, because we need to unload a big position, so you literally, in that video he has, and I'm sure your followers have seen it, the YouTube video where he does a manipulation speech. Seen that one?
Oh,
the guy, Aaron Task. Right? Aaron Task is interviewing him, and he's like, listen, if you need to get a stock to go up, you create an impression that something's happened. You foment, and he goes, it's illegal, but you do it anyway because the SEC doesn't know what they're looking at. And you're like, you got to be kidding me! You run a hedge fund and CNBC, and you're telling people you do this crap? He used to work for Goldman Sachs, so why wouldn't he be, hey, yeah, sure, my buddy at Goldman Sachs, I'll hook you up. I'll do a buy recommendation on Netflix. You can unload your 5 million shares of Netflix to the waiting public. It's a scam. Totally is.
Yeah, that's actually how I feel. So, you know who Gordon Johnson is?
I don't know who Gordon Johnson is.
Oh, now if you watch him, it's for comedic purposes.
Okay.
Only. Because if you go to like tip ranks, he's like the bottom out of 7,500. He's the worst. He's got a price target of $67 on Tesla. Still thinks Tesla's going bankrupt. And at this point, I'm thinking the only thing is he actually is bullish the company. Somebody in oil company is paying him to say bearish things, but he just can't do it at heart. So he comes out and says the most astronomical, just
$67, huh?
Yeah, that's an upgrade, by the way. He just upgraded after the last earnings.
So he upgraded. Okay, so just so you guys know, that's number way down here at the bottom of the page. And I'll be honest, I was never a big fanboy of Tesla, but I've become one from watching some of the interviews, not from Elon Musk, but actually from their IT department and the AI particularly. Just really blew my mind at what they're doing. But $67, I mean, you've got to be smoking some crystal meth to get that number. That is absolutely insane. I mean, they would literally, I don't even know what could happen to get Tesla down to $67. I agree, it's overvalued right now, personally, just off the fundamentals, but growth factor for the future could push it even higher. But 67, come on, man. Come on.
Yeah, I used to get angry listening to the guy, because he's on mainstream news, but now I think they just do it because they know everybody's just laughing at him.
Right.
There's no way. But back to Netflix. I told you this in your stream the other day. I did take the L. It jumped right down into that, even the yellow zone you have on your chart. And I thought that was manipulation. I was like, okay, so they sold this thing off because they're about to announce a good earnings, which I think they did, right? They just lowered guidance.
Yep.
There's always a story in there.
Yep.
Yeah.
Well, and I can't be mad at you for that. I mean, I wouldn't be mad at you anyway. But it was like buying right at that spot. I've just been burned too many times. And I mean, this one, that hurt. That hurt.
Yeah. Well, any earnings play is the same money I would take with the Jack and Coke to the roulette table. I would never act like that. It sucked losing, but it sucks losing at a roulette, blackjack. Craps. It's never fun to lose. But any earnings play ever is you call it a popcorn trade. It's going to go up or it's going to go down. Trade.
Big time.
You're going to know the next day if you're right or wrong.
Yeah. Yeah, and you mentioned going to a blackjack table or craps table. While it is that way, I have to disagree on one extent. Man, I believe that we as traders have the ability to put the odds in our favor. So when you go to the blackjack table, I got a 49% chance of winning. That means over the course of time, the house is going to win. The same thing on slot machines, roulette, craps, you name the game. No, there's no game where you have a high probability of winning, right? I think with us, in our quote-unquote craft that we do, it's really important that we can take everything that's in front of us and analyze it from a risk perspective and always put the odds in our favor. If we don't have those odds in our favor, then you move on to another trade. That's just the beauty of what we do. So I never equate it to gambling just for that reason, because if you treat it like that, then yeah, you'll end up losing over time. So it's high probability and is what I'm looking at.
How do you do that on earnings though?
I don't play earnings.
Okay. No, I'm talking about just earnings just for that reason. Like everything else, yeah, I agree with what you said. I thought you were about to say that with earnings. Like, I don't know. I just don't know a scenario where you can. I mean, I guess you could say there was long lines at the store the whole time, so they're about to announce good revenue. But
Yeah.
I don't know if that would be putting odds in your favor, because then there's the story of forward guidance.
Yep.
And then
I think the only thing I would do for like an earnings thing, like if I was playing it at all, I would look at something like a Netflix or an Apple, which is reported as well. Next week you got Facebook coming out next week, and Amazon and Google. You know, I might look at selling puts that are so far out of the money. You know what I mean? Like it'd have to be a 20% drop, because all of people are buying those things. So I'll collect some premium, and if I get it at that price plus the premium, then maybe it makes sense. Or those options just expire worthless. But I'd rather buy puts or calls the day after the earnings announcement, right? And as opposed to paying so much premium before. So again, it's not like I'm adding anything to my probability of the trade working, but I would rather miss the big gap like you saw here on Netflix. I'd rather miss that gap, but try to play maybe the gap fill or the next day when things calm down a little bit. I've been burned too many times, man. And you know, you got stung pretty good on this Netflix. I'm sure that's not the first nor the last time. But you.
Amazon was still the biggest.
Amazon will be interesting. I mean, if you guys look at the chart of Amazon has been surprisingly weak. Here is Amazon's chart. I mean, this one's really taking a dive for almost 3,800. It's down over $1,000 for Amazon. Do you know what's next? Time to declare a stock split.
You think so?
At some point, I think they got to declare a stock split. You know, just why not? Because what happens is people look at a price tag of $2,800, and all your little Robinhood Reddit traders go, "I can't afford $2,800." So we do a 10 for 1, or we do a 100 to 1 split. Now it's $28, and they'll all be buying it.
Yeah, I think that'd bring in some buyers.
Yeah, it's all psychology, right? It's still the same damn company.
Yeah, it's still a pizza.
That's it.
I want to answer one of your questions.
Yep.
Rob says, how do you manage your stop loss? Are you concerned with stop loss hunters out there? He says, I don't use stop loss. Whoa, hold on. We're gonna get to that in a second. I don't use stop loss orders. Got burned on a big gap down at open. The stock came right back. Oh man, you're letting a past trade really depict a lot of future results by not using that stop loss order. So it's never actually a loss, right? You're not getting your money back. Like, what trade are you taking in the first place to not make money anyway? Yeah, you're moving money around. It goes up and it goes down. First of all, stop hunts are amazing, because when you stop out, you get alerted. And if it looks like a huge spike down, I chase stop hunts like a storm chaser, because those are emotional. You can see them in charts. It's a borderline revenge trading, because they shoot down. You just buy the overreaction. It comes back up, sometimes all the way back up. So I love stopping out and finding out it's a stop hunt, because I have no problem getting back in. If you're stopping out and you're just devastated, your allocation was too high, you probably fully didn't understand the trade. Stop hunts are just some of the mechanics of the game. So I would always use one. But you got burned on a gap down at the open, this is what I call recovery mode. So if I wake up and it's below, then what I personally do is I risk the extra couple bucks. The first 30 minutes of the markets, it's too wild. I'm not trying to play that game. But after that, no new lows. So I begin to trail it. So there's a lot of times that has saved me, because it did just come right back up. You know, it's going to do one of two things: come back up, or pull a Netflix and continue to go back down. So let the morning volatility shake out, let the market makers get their coffee, and then after that, it's going to hopefully pick a direction. If it's further down, then I do stop out. Sucks. It gapped down below my stop, so I took a little extra loss. Or it trends back up, but I'm either going to lose less, or it makes a full recovery and I'm still in.
Yep. Rob, I got to respond to that one too. I think it's important. So he says, hey, how do you manage your stop losses? Are you concerned with the stop loss hunters? I'm personally not worried about stop loss hunters. It is what it is. I can't really play too much there. But he says, I don't use stop loss orders. Got burned on a big gap down to the open, and stock came right back. You're playing with fire, because let me ask you, you're a guy, you're a man here. I'm assuming. Imagine you went on you saw a girl you liked, or a guy, depends on your orientation. Who cares? And you decide to ask them out, and they said no. If that action caused you to say, I'll never ask anybody out again because you got rejected, you're shooting yourself in the foot, right? You're ruining your potential dating future. In trading, if you don't use a stop loss, we are in a market right now that is so overbought, so pumped up with Fed money and government stimulus and just hype, that if you don't have a stop loss, it could gap down past your stop loss and never come back. I'll give you the perfect example. I was long a company called Exodus Communications at $80. $80. Now, fortunately, I only had 100 shares, so, you know, $8,000, no big deal. That thing went from 80 to 70 to 60 to 50, 40, 30, 20, 10, 2, 1. I bought a shit ton of it at $1.50, made a lot of money back. It went bankrupt. Literally went to zero. And this was a company that our president at the time, Mr. Bill Clinton, thank you, Monica Lewinsky, for making him smile, said that this is a national treasure. This is an asset to America. That's Exodus Communications. And I fell for it hook, line, and sinker. So you have to use stops. I'm sorry, regardless of your time frame, because even though you think you're in the greatest company ever, could be Tesla, could be Amazon, you never know when that plug is pulled and something goes all the way to zero and leaves you holding the bag, and then your account's totally destroyed. So you got to use stop losses. I know it's going to burn you. It's going to burn you. Every now and again, you're going to get stung off the gaps. You're going to get stung off a big loss, but you won't take the catastrophic account blown loss. That's important to me. Anyway, my rant's over.
Yeah, that's such an important rant, though, because, man, you don't have a stop, it gaps down, and you saw one that recovered, but the next one you're in probably won't.
Right.
It sold, it gapped down for a reason. So now you're thinking, oh, I'm going to buy this. This is going to be you have your, let's say you have 10 grand. At some point, Merlin was 8 grand into that and then down to 4 grand, chose to hold. He made the conscious decision that day that his 4 grand to those 3 or 4 letters, whatever it was, is going to outperform every other 3 or 4 letters. Yeah, you've locked in a loss, quotes and all, if you close that position. Really, you took your 4 grand, you're going to put it somewhere else. You're always putting your money where it's going to grow, not putting it where it's going to just dwindle away or just holding it there. Like, oh, my money's on fire. I don't need a fire extinguisher. It'll be fine. It'll come back. It'll be magic.
Yeah. And not only did I almost lose every single penny of it, but you're right. There was opportunity cost, right? I had this $8,000 that was now locked in a sinking ship, and I'm just sitting there going, oh, it's fine. It'll resurface. It'll come back. And I convinced myself that this thing was going to go back to 80. And it's like, I should have had a stop loss in at 75. Lost $5 per share. Would have been, a $500 loss. Call it a day. Move on to something else. And I just didn't. And that was, for me, one of my major learning lessons in trading. And I always reference that one personally. But that's a story I'm happy to share with everybody here because, I like to think I'm somewhat intelligent. But I was an idiot for doing that. I was a complete moron for letting this thing go to zero. It went to zero. I literally, technically, I don't have a loss, do I? Because I never sold it.
Yeah, no.
Right? Technically, I never sold it to the IRS, but yeah, that was a rough one.
Man, yeah, that's wild when I hear people say stuff like that.
Yeah.
And everyone gets so focused. Everyone's so comfortable on the red, focused on the red, they really forget about the green. If you're in the market, home runs happen, gapping up happens just as much as anything else could happen. A gap down, that's all part of the game. And, if you're going to play it, that's the good and the bad comes with it. It's just how do we manage the bad when it comes? And to that note, also, how do you manage the good when it comes? Because a lot of people on the gap up will freak out, sell it open, and then it pushes up, and then they buy the next peak, and then it comes back and they give their money back.
It's just the nature of the beast. It just constantly happens. All right, what else is good out there? What do you I know I got to get my book out there. And Siraj, thank you so much for the contribution. I did see that earlier, but we were in the middle of a conversation. Thank you so much for your support. I do appreciate that. What else you got cooking? I know you do a regular thing on, was it Sundays your Tesla, or you used to have like all kinds of segments you did? What are some of the segments you do that these guys might be able to follow you at?
So just my YouTube channel, Sundays and Wednesdays I go live. But I did start a new YouTube channel.
What's up?
Subscribe to it, Merlin.
You started a new one?
Yeah, Don Fron Trading.
Oh.
So no spaces, still Don. But that, I know I put trading in the name, but that is only going to be pre-recorded content, short to the point. Like on Saturdays, I go over the expected move for the indexes, see what market makers are pricing in. That is all playing the YouTube game. So I'm trying to get everybody to get to that right now. Thumbnails are all going to be the same, all very themed.
Cool.
So
look at the smiley face. Who's that young guy that's in the picture?
That's me.
I got Grizzly Adams over here. Let's show the compare and contrast. I'll bring it. Look at that. Look at the beard compared to that one.
Yeah, Man,
It's winter in Kansas City. I know.
Like, I don't take pictures of myself. But I blend into the picture if I took that picture right now. I can't shave. I did recently, and then it feels weird.
It's winter time, right? Who needs to shave? I got to ask you, I have obviously, I don't want to call him a nemesis. It's just somebody I just despise in this industry, and you actually called him out on one of your shows and did some analysis on him. Did he ever respond back to you? For those who don't know, I was talking about Sam Seiden. Did he ever respond back to you with your challenge to him?
No. I've challenged a lot of YouTubers. None of them ever actually come back.
I think you had a lot of good merit to call him out.
Yeah. No one ever has.
Bummer. I kind of would like to see the challenge. I mean, it'd be interesting just to see even just a real like a trading competition, right? Because you really trade. Others are questionable whether they trade. So
yeah.
Hey.
So as far as trading goes, like there's trading competitions, and I don't know how to even fare with those. I've thought about them a lot, but I'm so like under the radar, or more income style. I don't really chase home runs, so small cap people could probably blow me away, like someone like Ross. But I'm so confident on everyone I've ever called out. Like even my strategy would blow them out of the water because these things they say would never work. Like it just.
I know, and you've seen it. I mean, and I agree with you. I don't like doing trading competitions. I actually did a couple years back, which was there was a futures World Trading Championship and a Forex one, which I participated in, and those things. What happened in a trading competition like that is you take the flyers because you're trying to get the most profits, and you end up doing stupid stuff. But I was just referencing like actual showing real trading because Sam will just call out 100 different levels and say, oh, look at this level, look at this level, look at this level, look at this level. And then, at the end, he'll go back and say, oh, I picked this level. I took this trade. And it's like, really? How about you show the real execution and not say, hypothetically, you made this money? I mean, let's show the real account, because I think the FTC pretty much pulled back the curtain on his accounts and said, you're actually losing money, dude. It was in the document. I'm not making up anything. It's literally in the legal document that says he traded over this window of time and he had a net losing position. So it's like, well, let's talk.
Yeah, that's why. Like, I know sometimes I have a bunch of zones like on like futures.
Yeah.
That's why I do different colors on mine, just so.
Show your charts real quick, because like mine, I keep things. I'm so simple, and I think it's easier for me to be making trades this way because I don't get. You have a language to your charts, right? So here's Don's. I'll move that one. This one wasn't it, but you had another one on earlier. It had like pinks and blues and all kinds of crazy colors.
Oh yeah, so yellow 4 hour, blue is like hourly. I call those speed bump zones. That's where I'm just thinking like, if I'm in a trade, that's where management happens. That's where I want to add on. If you're mentioning a pink one, right
there, you go.
So pink is a weekly zone. Yellow, 4 hour again, right here.
It's funny. I like it because what level am I looking for on the S&P? 4,500, which is right where you're at. So we're on the same page.
Yeah. So and just the mechanics of the market, as you step down in time frame, there's a certain amount of people looking at the hourly. It's everybody on the 1 minute, the 5 minute, the 15, 30, and the hourly. But you have all those time frames inside that weekly. So there's the higher the time frame, the stronger it is because you have just that much more of your group looking at it. Mm-hmm. So for overall market sentiment, I'm watching, the overall trend and these yellow zones. But if I'm inside the futures contracts, then I'm definitely paying attention because there's a lot of money to be made. If you trade futures from here to here, that's a decent position. You can make money just on that trade. So I don't like it when my charts get super noisy. I don't like having 9,000 zones because there are people that either their zone is half the screen, and of course they picked the right one, or they have a zone or a level at every tick. Like, and you're just like, well, yeah, as long as you bought at one of those, you're good. And then you pick another one. Like,
right. Yeah, you got to have room for it to run, Like if I'm going to make it go long on something, I want to have, a little bit room for it to run to get to a target, not, oh, it was 2 ticks on the futures contract, let's get out.
Yeah, and there's a difference between, there's a reason there's not a zone right here. Like maybe on the 1 minute there might be a little rally-based rally there, but that doesn't mean anything to me. Like I don't get why people people do that. I've definitely seen some crazy charts out there. You'd have better luck following an indicator.
You know, and I think you would agree with this. To me, it matters to me in my style, and I understand that it matters to you in your style, but honestly, it really doesn't matter as long as the end results are your account is growing at the rate that you would like it to grow at. Obviously, keeping some reasonable appreciation like 5 or 10 or 20% per year, whatever that number may be. You're not going to be getting hundreds of percent per year, year over year. That's just going to be impossible to do. But, you know, I've seen people use all kinds of indicators and their chart's just a complete mess. And you're like, man, I can't even see what price is, and they're still doing okay. So I just always for myself, or not always, but I learned probably 5-6 years into my trading that by removing a lot of the indicators, I removed a lot of the distractions, and I could focus on what price was doing, which is I'm trading price ultimately. So let's focus on that.
Yeah, and so I say this to my following and yours if they're listening right now. What you find out when you delete those indicators, if you can delete that indicator and you're just fine, who cares? Then you were paying attention to the price. Most people are lying to themselves. Like they think they're looking at price, they think they're price action traders. They got 14 indicators out there. They could delete the candles and still make every trade they're making because all they care about is the indicators. And that's where I think people get in trouble. And, you know, when it becomes more of a, when it's no longer a, let's just check this out and see what it says. Like, you know, when I pull up indicators, I'll say, what's retail thinking? Okay, retail thought it was oversold, but, you know, that doesn't really mean anything. Everyone else would only be focusing, like their mindset is probably more this than anything else. So if you're gonna have indicators up there, it at least needs to be something more like this kind of mindset. Like indicators need to take up about this much real estate. The rest needs to be the actual price action.
Yep, and I like how you have it there. It's like, you know, you can look at the indicators and yeah, what do you got? RSI? Was that RSI at the bottom?
RSI and MACD because they're popular, and then I have the popular EMAs over here.
So you got RSI and MACD on there. RSI is just gave you a buy signal. MACD is just about to give you a buy signal, or depending on how you read it. So you can look at those indicators and say, great, I could buy on RSI, maybe on MACD, but what's more important is it came into that area of demand that goes back into late September, early October, period. Those are confirming indicators that validate your decision to go long at this point.
Yeah, and then set an alert.
Yep.
So this is my alert I set on stream the other day. Because I was calling out a range. We've been range bound. In fact, if you look at the 4-hour, we've been inside this one push up all week. But that's where that alert was because I wanted to know if we break that, then, you know, right now for the following week, I'm kind of focused on do we break below or above. I think NASDAQ will lead the way. So I'm kind of watching this. Above this weekly zone, I think we push up to here. This is where I'm grabbing puts. But if we break this zone, you know, I'm getting out of it. That's not a single indicator is involved in that thought process, but other than just sellers, now we have buyers and sellers playing the game of tug of war. You know, I'm on the buy side right now, but I have the perk as a trader of letting go of the rope. As soon as we let go, let's say we break down, I'm long and we break this zone, we head south. You know, I'm letting go of the rope right here. I'm not going to just get drugged through the mud while they go through a victory lap. I'm going to jump on the other side real quick. And that's, you know, not
analysis, and I think that's probably why we get along so well, is we both look at this and have the kind of the same overall perspective. Oh, my internet's unstable. Isn't that great? Huh.
Yeah, mine said yesterday on YouTube as well.
Yeah, well, I'm having issues at my place, but I think it should fix. It's better now. So, all right. Well, I guess that's the market. I guess that's the gods telling me that A, I'm out of whiskey. B, I'm at an hour, which we went a little too long, but all good. I love having you on. Any other little plugs you want to give while we're here wrapping up?
Just be careful who you watch on YouTube.
There you go.
I guess be careful of the advice you're taking in, because right now, without ever even joining my group or anything like that, you can watch any of my old videos and just look at the charts after. And I would suggest do that with everyone you watch, because watch their excitement and their hype and all that, and then look what happened to the chart, and then look how many times they do that. And then, because right now with markets getting choppy, or we might actually be changing markets. Actually, can I share my screen one more time?
Sure, of course.
This is something. If we're going to talk about characteristics, this is the last point. This is what kind of has me thinking we might be in for something. Okay, so we know everyone thinks the crash was right here. They think this is where we melt off. That's the Rona crash. the crash actually started right here. So if we look characteristically, we were on just a normal grind up. So right there, characteristically, everything stayed the same. Yeah, there's the ups and downs, but look overall, put your beer goggles on, blur that up a bit. That is the same trajectory. But right here, we actually full send it up and then back down, and then this giant check mark of just buyers. So if we're actually going to close that chapter, you know, there's a market excuse, there's whatever it is. If we're going to close all of this out, you know, what if we do just come all the way back down to this level? The only thing we did was got crazy emotionally, came back on to check, and then we're kind of just right back on this trend up. So we could still pull back a while, and there's so much room not to be bearish. I just want to be cautious when I do call out a bunch of bearish stuff because we've been in such a bull market for so long. But we have so much room to pull back that things are still fine. Things are still bullish. What you guys might call a crash because traders are so narrowed in, and in this YouTube world, we're so focused in on stocks that one red day is so big, but there is so much margin to the downside and us still be in an overall trend up. So that's my last piece is without panicking and fire selling everything, you know, make your decision long or short, but we have room to go either way. Yep,
I agree. You know, and again, that's why I was maybe hard on Rob saying, hey, listen, make sure you use stop losses because you just never know. If trend is your friend to the bend at the end, we're bending. It hasn't quite bent yet. You know, I don't think we've gotten that full on, hey, this is a trend reversal of this, what do we call it, 13-year rally. But at some point that will come, and hopefully we are all positioned. And we just go, hopefully what happens is all of us just go, okay, cool. Now we're in a downtrend. I'm shorting everything. I'm shorting rallies, you know, buying, closing my shorts near some demand zones, and just reverse your mindset and reverse your thinking. It's awesome.
Yeah, it's all the same game. You just cannot not have a plan. A plan is an entry, a stop loss, a really three numbers. You should have all the what if scenarios answered before you click the buy button. And then the plan's either going to work or it's not. Just stick to that plan and go. If your plan is continuously not working, start working out what's wrong with that one. If you're emotional every day and your plan constantly changes, you have no ground game to adjust.
There you go. Love it. All right, man. Well, hey, thank you so much. Sorry it's taken so long to get you back on the show. Love always having you on. Good luck on Don Fron Trading on YouTube. He's also got the Don Fron Show on YouTube. So he's got both of those channels, but I think you're migrating over to the Don Fron Trading, right?
The trading is just if you want to just go consume that and that's done. The show is because I always just get I cannot not answer people. I love talking to people. The community aspect is why I'm here. The YouTube just doesn't like that because my headline and my thumbnail is one thing and I answer it. But then the other 45 minutes, I'm talking to the community. So that one's playing the YouTube game. If you want to just get to the point and you like that thumbnail and title, that's what I'm talking about.
Nice. Love it. All right, man. Well, hey, thanks so much for the insights. Love your perspective of the financial markets, and hopefully we'll get the year internet skipped.
Oh, did it? Oh, no. Let's do it next month until this crash is over.
Sounds good. Perfect, man. Thank you so much. I'll see you next time, my friend. Take care.
Have a good one.
You too. All right. Well, that was great, other than my internet having issues. I think it was my internet having issues. Yeah, the clock just hit 0, Big Eb. Where are you? We actually made it to an hour. I don't have any economic calendars or announcements for next week. There are a lot of them, by the way. You've got Google, you have Facebook, and you have Amazon reporting earnings next week. You also have some big central bank stuff, but that's not going to be on Monday. That's going to be later on in the week, so we'll forego prolonging the show anymore. Again, thanks Don Fron for coming on. You guys can check him out on social media. He's on Twitter, although he's more active on his YouTube channel, which is where you get some great videos and interaction with him. So thank you guys so much for joining us today. Again, if you have comments, feedback, suggestions, or if you're new, hit that subscribe button. You can email me at TraderMerlin@gmail.com. Hopefully, I will get my lights fixed so I don't look like a pink pimple over here on the show today. It's just a horrible light scheme. I got to get this dialed in. But anyway, thank you guys so much. Have a fantastic weekend. Cheers. I'm going to get another glass of whiskey. I'll see you on Monday.